Never wonder how the companies really shaping our global security are performing. Not just, out in the field, but in the boardroom. We're talking about the real titans of technology and defense. And today, we're putting one of the biggest under the microscope. Lockheed Martin, welcome to the Deep Dive. This is where we try to cut through all the noise and get you genuinely well informed and fast. So today, our mission really is to peel back the layers of Lockheed Martin Corporation's 2024 annual report, their own Form 10K. This isn't just about crunching numbers. It's about understanding how a global powerhouse like Lockheed Martin truly sees its past year, its financial health, and, well, its strategic path forward, right from their own account. You're going to walk away, hopefully, with some surprising facts and key insights you might totally miss just sifting through the raw data yourself.
Exactly. And what's really fascinating about digging into this 10K is that it's their story, right? Their self-reported view. It gives us this unfiltered look into their strategic priorities, their successes, and crucially, where they face some pretty significant challenges. It's their perspective on their own very complex business. And yeah, it offers unique insights you just wouldn't get from a news headline.
Okay, right. So let's unpack this. Starting with Lockheed Martin's very core identity. When you hear the name, yeah, you think global defense, advanced tech. But what does that really mean in terms of their actual business model?
Well, their 10K makes it pretty crystal clear. They are a global aerospace and defense powerhouse, yes, absolutely. But their customer base, it's overwhelmingly governmental. I mean, a staggering 73% of their 2024 net sales came just from the U.S. government, and 65% specifically from the Department of Defense. So this isn't just like a regular business. It's practically intertwined with national security, and that really dictates their whole strategic direction.
And that strategic direction, they call it 21st century security, sounds ambitious. What's the actual vision behind that phrase?
It is ambitious. It's basically their grand strategy to evolve, to move from primarily being a builder of platforms, jets, ships, to being an integrator. An integrator of these interconnected defense ecosystems. They're really pushing, accelerating the adoption of advanced networking and cutting-edge tech into the defense enterprise. The goal is to weave together and constantly upgrade systems across all domains: land, sea, air, space, cyber. Make defense forces not just stronger, but frankly, profoundly unpredictable for adversaries. It's about achieving that peace through strength, as they put it, by being technologically way ahead and seamlessly integrated.
Right. So it's not just about building a better jet anymore. It's making sure that jet can talk to a drone, which talks to a ship, which talks to a satellite, that kind of thing. Where are they actually putting their investment dollars to make this 21st century security happen?
Precisely that. They're investing heavily in areas like AI and machine learning, autonomy and crewed teaming. Think F-35s flying alongside combat drones like the XQ-58A Valkyrie. And generative design, plus a huge focus is on capabilities for what they call Combined Joint All-Domain Command and Control, or CJADC2. That's essentially the glue, that seamless communication and operation across every single military asset.
And it sounds like this isn't just theory. The report actually points to real-world examples already happening.
Oh, absolutely. They're delivering modernized TR-3 F-35s. That's a really crucial tech refresh for the jet's main computer system. And get this, they've rapidly fielded software updates for Aegis systems via satellite, directly to U.S. Navy destroyers operating in the Red Sea. That last one, that's a direct real-time example of the vision in action. It shows how they're deploying advanced capabilities right into, dynamic hot operational zones.
Wow, that Red Sea example. Deploying updates via satellite to ships on station. That's genuinely impressive. Feels like something out of a movie, that real-time defense innovation. And they mentioned something called the 1LMX transformation as being integral to all this. Is that like an internal thing?
Yes, exactly. 1LMX is their big comprehensive business and digital transformation program. Think of it as the engine room, right? Driving efficiencies inside the company by standardizing processes, modernizing their IT systems, boosting transparency, improving collaboration across the whole organization. It's a massive internal overhaul, really, designed to make them much more agile and efficient at delivering those 21st century security solutions.
Okay, so with that big strategy in mind, let's get into the nitty-gritty of their operations. Lockheed Martin splits its huge business into 4 main segments based on what they make or do: aeronautics, missiles and fire control, MFC, rotary and mission systems, RMS, and space. Let's start with aeronautics. What's the main game here? What are the big programs?
Aeronautics is, well, it's all about advanced military aircraft. So combat jets, air mobility like transports, unmanned vehicles, and of course their highly secretive classified programs. Their crown jewel, no question, is the F-35 Lightning II program. It is their single largest program. We're talking 26% of total consolidated net sales and a massive 65% of just aeronautics sales in 2024. Other big names in there are the C-130 Hercules, the F-16 Fighting Falcon, and the F-22 Raptor.
Wow, 26% of the whole company from the F-35? That's a huge reliance. So how did aeronautics actually do financially in 2024? Did that F-35 powerhouse drive growth for the segment?
It did, yeah. On the top line, net sales for aeronautics were up by $1.1 billion. That's about 4%, hitting $28.6 billion. And that growth was mainly driven by F-35 sustainment, keeping the existing planes flying, plus production and development, and also a ramp up in F-16 production. So clearly, demand was strong.
But sales growth doesn't always mean profit growth, right? What's the real bottom line picture there for their aircraft division?
You nailed it. While aeronautics sales climbed, the really striking detail in the 10K is that operating profit actually dropped significantly. It went from about $2.8 billion in 2023 down to $2.5 billion in 2024. And the report pins this on a massive $555 million loss they recognize on a classified program. This isn't just a small blip. It really highlights the immense risk Lockheed takes with these super complex fixed-price development contracts. One unexpected hurdle, and boom, hundreds of millions in profit just evaporate. It's like agreeing to build a custom spaceship for a fixed price before you've invented the engine. That's the kind of risk.
Wow, $555 million loss on one program. That's a huge hit, even with sales going up. But they're also innovating within aeronautics, right? Tell us about Skunk Works.
Skunk Works, yes. They're a legendary advanced development programs organization. They're always looking over the horizon, focusing on things like sixth-generation air dominance, the next fighter jet, and autonomous capabilities. Stuff like the X-62A test aircraft, and even an optionally piloted blasted Hawk helicopter. They're definitely investing in the future of air power.
Okay, moving on to missiles and fire control, or MFC.
Yeah.
This sounds like the segment dealing with more immediate tactical defense stuff. What does it cover?
Yeah, this segment is absolutely critical for modern warfare. Think air and missile defense systems, Patriot Advanced Capability 3, PAC-3, Terminal High Altitude Area Defense, TAA, also tactical missiles, precision strike weapons, HIMARS, GMLRS, JASM, LRANM-ARS, Hellfire, hypersonics, Javelin, and it also includes fire control systems, logistics, even some ground vehicles. These are the systems often making headlines in current conflicts.
Right. And MFC saw a strong sales increase last year. What drove that? And crucially, how did their profits look? Because aeronautics set a worrying trend there.
Sales were indeed strong, up $1.4 billion. That's a big 13% jump, hitting $12.7 billion in 2024. This was largely because they really ramped up production on things like GMLRS, LRASM, JSSM, and PAC-3. High demand, clearly. However, you guessed it. Similar pattern to aeronautics, but even more dramatic. MFC's operating profit experienced a massive decrease. It plummeted from over $1.5 billion in 2023 to just $413 million in 2024.
Just $413 million from $1.5 billion. That's an even bigger drop. What on earth happened there? What caused such a huge hit in missiles and fire control?
This was due to substantial reach-forward losses. That's the accounting term of $1.41 billion, billion dollars with a B,
Right.
recognized on one specific competitively bid classified contract that had fixed price options. Basically, what happened is they bid a certain price initially. Then down the line, it became clear that all the future options on this contract would probably be exercised by the customer, but at a loss for Lockheed. It's a really stark example of the extreme financial risks in this sector, especially with development work under these fixed price deals where your initial cost estimates might turn out to be, well, fundamentally too low. It really hammers home the financial exposure.
$1.4 billion. That's staggering. It really underlines the challenge of pricing and executing these massive long-term government contracts accurately. Okay, next up. Rotary and Mission Systems, or RMS. This sounds a bit more diverse.
It is, yeah. RMS covers a pretty wide range. Everything from military and commercial helicopters, think Sikorsky's Black Hawk, Seahawk, the big CH-53K King Stallion at Sea, and land-based missile defense stuff like the Aegis Combat System. Also radar systems, mission and combat systems, integration, cyber solutions, even training programs. It's quite a broad portfolio.
Okay. And how did RMS do in 2024? Did they manage to avoid those big profit hits we saw in Aero and MFC?
Some better news here, actually. RMS had a pretty solid year. Net sales increased by $1.30 billion, or 6%, reaching $17.3 billion. This was mainly driven by growth in their integrated warfare systems and sensors programs, things like radar, the Canadian Surface Combatant Ship Program, laser systems, and also increased production of the CH-53K helicopter. And importantly, unlike the first two segments, their operating profit actually increased slightly to $1.921 billion. So they showed some resilience there.
Good. Good to see some positive profit movement somewhere. All right, finally, there's the space segment. This is where things get really cutting edge, I imagine. Outer space, satellites.
Indeed. This is the team focused on satellites, space transportation, strategic missiles, defensive systems, and that kind of network-enabled situational awareness from orbit. Major programs here include the Trident 6 D-5 Fleet Ballistic Missile, FBM, the Orion spacecraft for NASA's Artemis missions, the next-gen OPR missile warning satellites, GPS-3 hypersonics development, and the next-generation Interceptor NGI program.
So how did space perform last year? Growth or?
Interestingly, in space, net sales actually saw a slight decrease, down $126 million, or about 1%, bringing them to $12.5 billion. The report says this was mainly due to lower volume on some classified national security space programs and also the Orion program, but that was partly offset by increased work on the Trident 7 D-5 FBM program. However, despite the slight sales dip, their operating profit for space actually increased up to $1.226 billion. So that's just pretty efficient management, finding profit even at slightly lower volume. And they also had a key success launching the 7th Lockheed Martin built GPS third satellite in December, supporting the U.S. Space Force.
Okay, so we've walked through the segments. Let's pull back now and look at the overall financial pulse for Lockheed Martin in 2024. What are the big headline numbers for the whole company?
Right, the overall picture. The company reported $71.2 billion in total sales. Net earnings came in at $5.3 billion, and that translated to earnings per share, or EPS, of $22.31.
71 billion in sales is huge. But you mentioned those really significant profit hits in aeronautics and MFC. How did that ripple through to their overall profitability?
It had a very noticeable impact, yeah. Consolidated operating profit, the profit from all segments combined, was $7.013 billion in 2024. That's down quite a bit from $8.507 billion in 2023. And this decline was, as we discussed, heavily driven by those negative profit adjustments, those huge losses on the classified programs in aeronautics and MSC. It's a perfect illustration, really, of how bumps in executing specific large programs can directly drag down the entire company's profitability. Their overall segment operating margin also slipped from 10.9% in 2023 down to 8.6% in 2024.
Okay, and what about cash flow? Investors always watch that closely, right? Especially in an industry needing lots of capital like defense.
Absolutely. Cash is critical. Their free cash flow, which is a non-GAAP measure they highlight, basically cash from operations minus capital expenditures, was $5.287 billion in 2024. That's down from $6.229 billion in 2023. Similarly, net cash provided by operating activities decreased to $6.972 billion from $7.920 billion a year before. Now, the main reason they give for this decrease in both operating cash and free cash flow was a very significant pension contribution. They put $990 million into their pension fund in 2024.
Nearly $1 billion just for pensions. Wow. Okay, that certainly explains a big chunk of the cash flow drop. Let's touch quickly on their balance sheet. As of the end of 2024, what's the snapshot there? Debt, equity.
Right, balance sheet check. Total debt, net of cash, increased. It went up to $20.270 from about $17.5 billion in 2023. This reflects them issuing new debt, for instance. They issued $3.0 billion in senior unsecured notes in 2024. Helps fund operations, investments, maybe those buybacks we'll get to. Total equity, on the other hand, saw a slight decrease, down to $6.333 billion.
But there's an important detail here for shareholders, isn't there, regarding the number of shares floating around?
Yes, exactly. Good point. Their common shares, outstanding the number of shares held by the public and institutions, decreased, down to 234 million from 240 million in 2023. And reducing the share count like that is key because it helps boost earnings per share. The same net earnings divided by fewer shares makes each share's portion look bigger.
Right, which leads us nicely into how they're actively creating value for those shareholders. Dividends, for one thing. They paid out quite a bit.
They did, yeah. Consistent dividend payer. The company paid out $3.1 billion in dividends during 2024. That worked out to $12.75 per share for the year, which was an increase from $12.15 per share in 2023. So a clear commitment to returning capital directly to investors and growing it.
And they're also buying back their own shares. How much did they repurchase, and what's the plan there?
Yes, share repurchases are another big part of their strategy. They bought back 7.5 million shares for $3.7 billion in 2024. Now, that was actually less than the $6.so billion they spent on buybacks in 2023. But what's notable is their board okayed another $3.so billion for the share repurchase program back in October 2024. So they still had $9.3 billion authorized and remaining for future repurchases at year-end. This strategy, again, directly helps reduce that share count we just talked about. boosting EPS and signaling management's confidence in the stock's value.
Okay, so all these actions, dividends, buybacks point to a company really focused on both its operations and keeping investors happy. And looking ahead, what about future revenue? They have a strong backlog, don't they?
Oh, absolutely. Huge backlog. It stood at $176.0 billion at the end of 2024, which is up from $160.6 billion the year before.
Right.
And they expect about 35% of that backlog to turn into revenue within the next 12 months.
Yeah.
So that's a very healthy pipeline, gives them pretty strong visibility into future sales.
So this brings up the big question, really. What does this all mean for Lockheed Martin going forward? They anticipate growth. They're committed to that 21st century security vision. But where do you see the significant hurdles or challenges they need to navigate?
Well, look, their core reliance on U.S. government contracts, that's 73% of sales. Figure it's both a massive strength, providing stability, but also vulnerability, right? They face inherent risks tied to shifts in U.S. defense spending priorities, budget battles in Washington, potential government shutdowns, things like continuing resolutions which freeze spending levels. That uncertainty is always there. And the F-35 program specifically, being such a huge chunk of their business, 26% of total sales, carries this outsized importance. Any issues there, performance, schedule slips, cost overruns, supplier problems, software glitches have a disproportionately large impact on the whole company.
Right. And beyond just government funding, what about broader operational or geopolitical headwinds? Supply chains must be a constant concern.
Yes, definitely. Supply chain challenges are a big one, especially for critical components like advanced microelectronics, semiconductors. That can lead to longer lead times, higher costs. It impacts everything from production schedules to program profitability. And as we saw so clearly with aeronautics and MFC, that trend towards more fixed-price development contracts and options, while maybe good for the government customer's budget certainty, it demonstrably shifts more risk onto the contractor. Lockheed ends up bearing more of the financial pain if costs overrun or unexpected technical problems pop up. Those huge classified program losses in 2024 were a brutal lesson in that.
And then there's the global stage. You have conflicts like Russia, Ukraine, tensions in the Middle East. That must be a double-edged sword, increasing demand but also creating instability.
Yeah, exactly. Increased geopolitical tensions can certainly drive demand for their products, no doubt. But they also introduce supply constraints, logistical headaches. Plus, U.S. foreign policy decisions think sanctions on China potentially affecting sales to Taiwan, or maybe issues cropping up with international partnerships, like the Turkish utility helicopter program they mentioned, can directly impact international sales and program execution. It's a really complex web. To try and manage all these risks, the company emphasizes continuous investment in differentiating technologies, staying ahead of the curve. Strategic partnerships, including, interestingly, with commercial tech companies, plus enhancing their digital backbone through that One LMX program we talked about. And, of course, maintaining fiscal discipline and investing in their workforce, their human capital. It's a multi-pronged approach to a very tricky environment.
Okay, so wrapping up this deep dive, what we've seen is Lockheed Martin as a company with incredibly robust but also very complex operations across its four main segments. Their strategic importance is undeniable, really highlighted by that 21st century security vision, aiming to integrate all this cutting-edge tech into global defense. And while they posted strong overall sales, a healthy backlog, we also uncovered some specific, pretty significant challenges, particularly in profitability and cash flow, tied directly to those immense financial risks in large fixed-price development projects, especially those classified ones. But despite those hurdles, they seem deeply committed to shareholder value through those consistent dividends and pretty hefty share buybacks.
Indeed. I mean, the story of Lockheed Martin in 2024 isn't just about the numbers on a page. It really is a profound reflection of this intricate dance, isn't it? Between pushing innovation, meeting national security needs, and managing the undeniable financial exposure that comes with developing the absolute next generation of defense tech, especially in today's rapidly shifting geopolitical landscape.
That's a great way to frame it. This deep dive definitely makes you think about the unique pressures and balancing acts for a company like Lockheed Martin. And it leaves us with a fascinating question for you, our listener, to maybe chew on. In a world where the geopolitical map seems to be constantly redrawing itself, how does a company like Lockheed Martin balance that urgent need for national security innovation against the inherent, sometimes massive, financial risks of developing these cutting-edge, often totally unproven technologies? And maybe, what does their continued pursuit of peace through strength, as they say, truly mean for the future of global defense and for the industries that actually build it? Something to reflect on. We hope this deep dive gave you some valuable insights and maybe changed your perspective a bit on the defense industry or even just how to read these complex corporate reports.